Good morning. It's good to be with you, even if we are only meeting virtually. I'd like to thank Ashley and Ben for inviting me to make this presentation and helping me putting things together. COVID-19 has scrambled the outlook for potatoes this year, and so what I would like to do is spend a little bit of time going through the potato situation that has evolved over the last year, and then take a look at the outlook for the coming year. So a year ago, as I was meeting with this group in person at the time, I indicated that that 2019 would be a year for growers to remember. Supplies were tight, demand was strong, prices were going to be strong, and Idaho had a good potato crop, though not as good as what it had been historically. That scenario continued to play out very well until March of 2020 when COVID-19 came along. And as a result, we may think that 2020 will be a year to forget. It's been a very big challenge for the industry and for people in general. So we'll run through some of the impacts that has had on the potato market. But before we do that, we might want to ask ourselves, is 2021 going to be a year for hope? And there are promising developments out there, particularly the vaccine, but also the recovery that's happened since the depth of the downturn during the early months of the pandemic. So I'm going to run through the global French fry situation, global trade situation, kind of to give you an idea, because it's a microcosm of what is going on in the potato industry, and particularly for the frozen processing sector. This is monthly exports of frozen potatoes. The blue line is, this is from October of 2018 through September of 2019, with the red line being the most recent year, the 2019-2020 year. You'll notice on this that from October through February, global trade in French fries was running about 11% ahead of last year's pace. That changed beginning in March. The March downturn was not very much, but between April and June, global trade in French fries declined by 30%. And it has been coming up and recovering from those levels since then. In September, exports were actually only 2.8% below where they were a year ago now. This is global trade. This is not the US or North America. And one of the challenges that we are seeing still is that while the global trade is only down 2.8%, North American exports are still running about 15% behind last year's pace. We'll get into that a little bit more as we talk about the global potato supply situation during the current year. This is a further illustration. This is the United States, and you'll notice that contrary to some of the other commodities here that are produced here in Idaho, exports are not a huge factor, or have not been in recent years, a huge factor in the frozen French fry business. Actually, we do export a lot of French fries, but what we do is we import from Canada mostly until the last 2 years, as almost as many French fries as what we export. Now, as the pandemic got underway, our exports dropped off the chart and our imports remained fairly stable. And as a result, we were importing a lot more French fries than we exported. We got down here, that's about 95 million pounds more that we imported. I believe that was in June of 2020 than what we exported. Again, most of the product comes from Canada. It's the same processors. The drill tends to be that we optimize the system by exporting US product offshore and replacing it in the domestic market with product from Canada. Now, last couple of years, we have started to import a lot more product from Europe, and we'll talk a little bit more about that later in the presentation. Right now, let's look at the US potato supply and usage situation. I will begin by saying that processors last spring reduced their contract volumes by 15 to 20% in the United States, with frozen processing making up about a third of the crop. You would have thought that would result in about a 15% production decline. For several reasons, that wasn't the case. Production nationwide actually fell only 2.8%, and in the processing states, states with French fry production capacity or D-high capacity, production was actually up 0.5% from what it was a year ago. The big cuts came in California and Florida. Florida was a situation where chip potato manufacturers cut their contract volumes considerably, and that being the case, they reduced their production accordingly. With California, there were weather issues involved there. The cuts in Maine and Michigan were also weather and yield related. Maine did have some acreage cut, but not a huge acreage cut. The cut in Texas was a similar situation with Florida, where the chip potato producers cut back due to contract volume reductions. In Washington and Oregon, if you combine those together, the cut is fairly minimal, although we understand that the fryers did cut back close to 20% on acreage. Yields came out much stronger than what people had expected them to be. And so that was one of the reasons for the increases there. In Idaho, again, the increase is attributed to yield increases. The acreage was actually down. There is some question with the Idaho crop, and some people believe that it is not quite as large as reported, but it's certainly as large of a crop as last year, at least. We just yesterday received data on December 1 potato stocks in the major states, and potato stocks on December 1 are up 0.9% from where they were a year ago. If we look at that, what we see is production in those in the 11 states that we count for potato stocks. Production was down 1.1%. Fresh shipments were up 6.8% from a year ago. A couple of reasons for that. One is particularly North Dakota had a very poor crop last year and was really hurt. So they've rebounded in their shipments, but demand for fresh potatoes has also increased. Now that the increase in demand is a result of COVID-19, but it's a mixed bag where sales through retail stores, which usually involve 5 and 10 pound consumer bags of potatoes, are way up. There is what's called the food box program that's also boosted demand for those potatoes. On the other hand, we have a major shutdown, slowdown in food service sales due to the shutdown of restaurants and mass feeding things. So that has put a drag on business. And that being the case, that has created some major problems for Idaho shippers in particular, because Idaho has traditionally been heavily reliant on the food service business to carry its market. And with that demand being soft, it has created challenges and has forced lower prices on the Idaho potato growers. Processing, you'll notice processing use is down 5.7%. This is for the new crop. And that again is related to COVID-19 in a couple of ways. Number one, demand for finished product is a little bit down from where it was, although domestic demand has recovered. Export demand is not as good, particularly for frozen products, as what it was a year ago. So that has slowed things down. The other factor is that during the big slowdown during the summer, that backed up potatoes from the 2019 crop, and processors were using those potatoes much longer than they normally would. As a result, that reduced the need for new crop potatoes during the early part of the season. Now, the remainder of the season still is going to be dependent upon what impact COVID has on demand for frozen products, particularly, but we would expect that demand to be relatively strong at this point, given the recovery we've seen so far. Chip stock usage is up 15%. That is an increase that is partly related to COVID and partly related to the fact that the chip companies needed more potatoes this year due to some other issues with solids. That shrinkage, that's a little bit of a surprise that that's up as much as it is, 9%. The other usage, that category tends to flop all over the place and is not a major factor for the market. If we look by state where the stocks are increased, Idaho, we're up 5.4%. Big increase in Colorado, 21%. North Dakota, last year they had a disaster, and so they've recovered from that disaster. They're up 15%, but you will notice that they're below where they were in either 2017 or 2018. Combined Washington, Oregon, 77.4 million hundredweight, down from 81.3 million. So Columbia Basin's big processing state, and they are area, and they are down overall in their supplies. So that is a factor to be watching as we move forward. Disappearance early in the season, probably the biggest thing to note is that even though Idaho, even though the processing use was down from last year, Idaho stocks are only up 1.5%. If we look at the Columbia Basin, stocks are actually down from where they were a year ago. And there are some big declines in some of the other areas. Maine, of course, due to their drought, as well as Michigan with lower yields. Minnesota, the Minnesota number can move around quite a bit. So I don't think that's one that's a bellwether to look at. But overall, overall usage, we're down 4.9%. And in processing use, it's interesting if we, instead of just looking at the new crop processing, if we look at all processing between June and November, we are down 11.8% from a year ago on total processing use. D-high usage was reported to be down 6.5%, and other processing, which is mostly French fry production, is actually down 12.9%. So big drop in processing, and particularly in that frozen processing arena. So that is a concern, although the evidence now is that the biggest part of the decline, at least in the Pacific Northwest, is behind us. Demand is strong. Plants are running near capacity. They are taking some downtime for the holidays. That's normal. But overall, there is no big change in usage patterns now from what it was a year ago in the Pacific Northwest. Now, in the Midwest and in Maine, that situation is somewhat different, and that is really because of supply issues and not because of demand issues. Now, switching gears just quickly, we'll run through the Canadian situation. They too had a big cut in processing contract volumes. Interestingly, though, last year they left a huge volume of potatoes in the ground, and that was what we were talking about a year ago with the year to remember. This year they harvested almost all of the crop, and as a result, even though they did have some big issues in the maritime provinces where they had a huge drought and production was down 20% there, that was offset by gains in Ontario, in Manitoba, and Alberta, so that total production was only down 1.3% from a year ago. By December 1, the Canadian potato stocks were actually down 6.7% from where they were a year ago. Again, a big part of that cut was in the maritime provinces, where stocks were down 20.6%. Quebec, which is mostly a table potato producer, although they do have some French fries and potato chips as well. They're down 5%, even though they did report a small gain in their production. The other one, and this is a big surprise, if you'll remember from the previous slide, when we go back here, Alberta's production was up 7.8%, but their December 1 potato stocks were down 7.3%. That can be attributed to two things. One is that the processing plants have been running full bore in Alberta, and the second is that any extra potatoes that the growers had have been sold and shipped to Manitoba, because even though Manitoba's potato stocks are up 18% from a year ago, that increase is not enough to run the new processing line that Simplot built, and which started operations last January. That line is designed to use or to produce 400 million pounds of French fries a year. So it needs a lot of potatoes, and the supplies just aren't there to support that. So that's a situation we need to be aware of. And so, if we look at this, again, in the maritime provinces, usage fell 19% during the early part of the season. All the other provinces other than British Columbia saw huge increases, double digits. And in the case of Alberta, because of the factors that I mentioned, their disappearance early in the season was up 77% from a year ago. Manitoba, again, with that new processing line, saw a 29% increase in their disappearance. So what that leaves, interestingly, if we look at this, Canada was way short on potatoes last year. This year, their table potato supplies are down 6% as of December 1. Processing potato supplies are down 7%, and seed supplies are down about 5% from a year ago. So again, that points to a situation that looks, at least on paper, to be very tight. Now, just briefly, we'll talk about a contrasting situation, and one that will prove challenging for the French fry industry at a minimum. And that is in Europe, the 5 countries that export most of Europe's French fries saw their production increase 10% from what it was in 2019. A huge increase. At the same time, the European fryers have been able to finally see their exports rebound, their exports to countries outside of the European Union. But demand within the European Union is still being suppressed by COVID-19. And as a result, the European processing plants are not using this increase in potatoes. We're seeing prices for potatoes quoted for processing potatoes less than $2 a hundredweight. And the most active market in Europe right now is the market for cattle feed and vodka potatoes. And those potatoes are selling for around a little over $1 a hundredweight, but not that much less than what the fryers are willing to pay for the potatoes that they're buying on the open market. So with that, let's just look briefly now at the global French fry trade outlook. this chart kind of shows the green area is what's happened with European French fry exports. And this is year ending September 30th again. In 2019, the European fries were were down a little bit, and that was due to a drought that suppressed production in 2018. Then they were set for 2020 to be a big recovery until COVID-19 came along. But you'll notice that the decline in production in Europe was fairly modest. These other countries include Argentina, New Zealand, and China. Now, the interesting thing, China doesn't usually do very much as far as exports, but because of a big jump of about 40 or 50 million pounds in China's exports during the year ending September 30th, that the other exporters as a whole actually increased their shipments slightly from what they were a year ago. So the big downturn that we see in the global market is North America. That's the United States and Canada. This excludes trade between the US and Canada, as it excludes internal trade within the European Union. Now, again, we showed this slide earlier, but this is the monthly trend that we saw there. Again, October through February, we were going at a rate 11% ahead of last year's pace, and then things just dropped off. This chart shows what kind of a trend we've had in global French fry trade since 2003. You'll notice that until this year, there's never been a year when global trade actually declined from the previous year. So this year is somewhat unique that way. And if we look at it a little bit, just a little bit more detail here, this gives some idea as to what we're dealing with. 2020, the year ending September 30th is 649 million pounds under the trend. And if we look at that, where it was running 10% or 11% ahead of the previous year, for the first 6 months, we're actually would have been 1.5 billion pounds higher in our trade for the entire period than what we were. Now, the big question is, how fast will we recover? And it would be nice to think that in 2021 we could get back to that trend. That's probably not going to happen due to the pandemic and the aftermath, including the economy. But with a vaccine coming online, and hopefully, you have enough people immunized by next fall, that in 2020, for the 2021 crop, the year ending September 30th, 2022, we might be able to get back to that trend line. What that would mean is we would need to increase French fry sales in the next 2 years by 1.35 billion pounds. And that's a huge gain. It's like a little over 3 plants, almost 3.5 plants actually, of the size that McCain's put into Burley a couple of years ago. Now, the capacity is there to do that, but it would certainly change situation around a lot. Now, the other thing that is involved there that everybody has to think about is what should growers plant in 2021? And the challenge is that in order to have the confidence to plant the potatoes, the growers are going to need to have contracts. And the contracts would be, would have to come up. Contract volumes would have to be at least as high as they were for the 2019 crop, probably somewhat larger than what was contracted in 2019. And so far, processors have been unwilling to commit to that kind of an increase. And rightfully so, because they are concerned about the uncertainties out there. It's interesting, the European Trade Association is calling on their growers to cut back on 2021 potato acreage by 20%. That's how bad the current situation is in Europe as far as supplies versus what the processors are using. Now, a cut of that magnitude, if it were to happen, probably would leave Europe short in 2020 with the 2021 crop. But it's understandable why people are thinking in those terms. Now, there are those that think that the recovery from COVID-19 will be much more gradual than what I'm indicating here, but I think my experience is people overreact one way or the other. Either they plant too many potatoes or plan for too many potatoes, or they don't plan for enough. And in a situation we're in right now, the processors are electing to plan for not the for a recovery that's less than what I'm indicating. So that will be the interesting thing as we go into the 2021 crop is how much the processors will want to have planted. Other sectors have kind of neglected a little bit, but at this point, I don't see any need for growers to plant more table potatoes. In fact, with yields going up every year and with Idaho continuing to shift from russet Burbanks to Norcotas for table potatoes, there's probably maybe a need for table potato growers actually to cut back. So I appreciate this. I hope that you've enjoyed this presentation, and I know that there will be a question and answer period, but thank you for your participation.